How to start investing in dividend stocks? A beginner's guide introduction. Hello and welcome to this guide on how to start investing in dividend stocks. If you're looking for a way to generate passive income and build wealth over time, dividend investing might be perfect for you. In this video, we'll cover everything you need to know to get started on your dividend investing journey. What are dividend stocks? Before we dive in, let's clarify what dividend stocks actually are. Dividend stocks are shares of companies that distribute a portion of their earnings to shareholders on a regular basis, typically quarterly. These payments, called dividends, represent your slice of the company's profits, unlike growth stocks that reinvest all their profits back into the business. Dividend-paying companies have established business models that generate consistent cash flow, allowing them to share profits with shareholders while still funding future growth. Why invest in dividend stocks? Dividend investing offers several compelling benefits. Passive income stream. Dividends provide regular cash payments regardless of market conditions. Reduced volatility. Dividend stocks are often more stable than growth stocks. Compound growth potential. Reinvesting dividends can significantly boost your returns over time. Hedge against inflation. Many quality dividend companies increase their payments annually, helping your income keep pace with rising costs. Partial downside protection. You'll still receive dividend payments even during market downturns. Getting started. A step-by-step guide. Step 1. Set clear financial goals. Before investing a single dollar, define what you're trying to accomplish. Are you building a retirement income stream? Saving for a major purchase in 5 to 10 years? Creating a college fund? Your goals will shape your dividend strategy, including which stocks to choose and whether to focus on current income or dividend growth. Step 2. Open the right investment account. You'll need a brokerage account to purchase dividend stocks. Consider these options. Standard brokerage account offers flexibility, but dividends are taxed annually. Tax-advantaged accounts, IRAs 401s, or Roth IRAs offer tax benefits that can significantly enhance your dividend returns over time. Most major brokerages now offer commission-free trading and fractional shares, making it easier than ever to start with small amounts. Step 3. Understand key dividend metrics. Before selecting stocks, familiarize yourself with these important terms. Dividend yield, annual dividend payment divided by share price, expressed as a percentage. While higher yields look attractive, anything above 5 to 6% warrants careful investigation. Dividend payout ratio, the percentage of earnings paid as dividends. A sustainable ratio typically falls between 30 to 60%, though this varies by industry. Dividend growth rate, how quickly a company increases its dividend payments over time. Companies with consistent dividend growth often outperform. Dividend history. Companies with long histories of maintaining or increasing dividends demonstrate commitment to shareholder returns. Step 4. Build a diversified dividend portfolio. Diversification is crucial for reducing risk. Consider spreading your investments across different sectors: utilities, consumer staples, healthcare, financials, real estate, and energy. Various dividend strategies. Blend high-yield stocks with dividend growth stocks. Multiple company sizes. Mix established blue chips with smaller dividend payers. A well-constructed dividend portfolio might include 15 to 25 stocks across different industries. Step 5. Choose quality dividend stocks. When selecting individual stocks, look for these characteristics: strong competitive advantages, companies with moats protecting their market position, healthy balance sheets, low debt levels relative to industry peers, consistent cash flows, steady, predictable earnings, even during economic downturns, reasonable valuation. Even great companies can be poor investments if purchased at excessive prices. Some beginner-friendly sectors for dividend investing include consumer staples, utilities, and established healthcare companies. Step 6. Consider dividend ETFs and funds. If you're not comfortable selecting individual stocks, dividend-focused ETFs and mutual funds offer instant diversification. Dividend VRM or dividend mutual funds, managed funds focusing on dividend-paying companies. These funds provide exposure to dozens or hundreds of dividend stocks in a single investment. Step 7. Implement a dividend reinvestment plan. One of the most powerful aspects of dividend investing is compounding through reinvestment. Most brokerages offer automatic dividend reinvestment plans that purchase additional shares with your dividend payments. Over time, this creates a snowball effect as your growing number of shares generates increasingly larger dividend payments, which buy more shares, and so on. Step 8. Monitor and rebalance your portfolio. Dividend investing isn't completely passive. Regular monitoring helps ensure your investments remain aligned with your goals. Review quarterly earnings reports for signs of trouble. Watch for dividend cuts or stagnation. Evaluate if your asset allocation still matches your objectives. Rebalanced annually to maintain your target allocation. However, avoid excessive trading. Dividend investing works best with a long-term perspective. Common mistakes to avoid: chasing yield. Extremely high yields often signal troubled companies with unsustainable dividends. Ignoring total return. Focus on both dividends and potential price appreciation. Inadequate diversification. Don't concentrate too heavily in a single sector. Neglecting tax implications. Be strategic about which accounts hold your dividend stocks. Impatience. Dividend investing rewards those who think in decades, not days. Conclusion: dividend investing offers a proven path to building wealth and generating reliable income. By starting with quality companies, maintaining diversification, and reinvesting your dividends, you can create a powerful financial engine that works for you year after year. Remember, the best time to start dividend investing was 20 years ago. The second best time is today. With patience and consistency, your dividend portfolio can grow into a significant source of passive income that supports your financial goals for years to come. Thank you for watching. If you found this guide helpful, please like, subscribe, and share with others who might benefit from learning about dividend investing. Hello friends. If you are looking to start investing in dividend stocks but don't know where to begin, then this video is for you. In this video, I will cover what are dividend stocks, how to choose a good dividend stock, and finally, how to buy dividend stocks. So let's get started. First of all, what are dividend stocks? Simply put, a dividend is a portion of a company's profits that it distributes to its shareholders. When a company makes a profit, it can choose to reinvest that money back into the business, or it can share a portion of it with its owners, which are the shareholders. Now, the money that a company pays to its shareholders is called a dividend, and the stocks that pay a dividend are called dividend stocks. Now that we know what dividend stocks are, the next question is, why should you invest in them? Well, there are many benefits to investing in dividend stocks. First of all, when you invest in a company by buying its stock, you become a part owner of that company. So when that company makes a profit, it's like you are getting a portion of the profit as a reward for being a shareholder. Secondly, investing in dividend stocks can provide you with a steady stream of income. This can be especially helpful if you are retired, or if you have other financial obligations that require a steady stream of cash flow. Finally, investing in dividend stocks can be a great way to build wealth over time. This is because when you receive a dividend payment, you can use that money to buy more shares of the company, which in turn will increase your future dividend payments. This is called dividend reinvestment, and it is a powerful tool for building wealth over time. Now that you know why you should invest in dividend stocks, the next question is, how do you choose a good dividend stock? Well, there are many different factors to consider when choosing a good dividend stock. However, one of the most important things to look for is a company with a long history of paying dividends. This is because companies that have been paying dividends for a long time are usually more committed to paying dividends in the future. Another important factor to consider is a company's dividend yield. The dividend yield is simply the annual dividend payment divided by the current share price. Generally speaking, a higher dividend yield is better. However, it is important to remember that a high dividend yield could also mean that the market is expecting bad performance from the company in the future. Therefore, it is important to do your research and make sure that the company is fundamentally sound before investing. Finally, the last step in investing in dividend stocks is to actually buy them. You can buy dividend stocks through a brokerage account. A brokerage account is simply an account that allows you to buy and sell stocks. There are many different brokerage accounts to choose from, so it is important to do your research and find one that meets your needs. Once you have opened a brokerage account, the process of buying dividend stocks is actually quite simple. You just need to find the stock that you want to buy and place an order to buy that stock. It is important to note that when you buy a dividend stock, you will not receive the next dividend payment. Usually, you need to hold the stock for at least 1 day before you are eligible to receive the next dividend payment. So these are some tips on how to start investing in dividend stocks. Remember to do your research and only invest in companies that you understand. With that said, I wish you good luck and hope you make a lot of money. Thank you for watching.